Hello, Mark Sturdy here with some brief comments on our weekly analysis this week. Let's look at the summary page. You'll see that we have gone flat in everything in the short term. We remain bears of the dollar, particularly against the euro. We remain bulls of stocks across the board. We remain bulls of yields in bonds, bearish of price across the yield, but we're saying that basically that the short-term situations are very uncertain. Let's quickly go to the dollar euro just as our first case in point. We think the dollar wants to weaken still against the euro. Nothing's changed. In fact, it's weakened quite rapidly this week, but you can see it's a 2-month weakening of the dollar, but it remains within a trading range, so it's not that exciting yet. It simply reasserts the notion, or rather is in line, the short term is in line with the very long-term weakening of the dollar. But there's a lack of clarity here. It's been going sideways since, the first quarter of 2025. Nothing much to report there. There is things to talk about here. First of all, to reassert our bullishness in the stocks, particularly the S&P 500. We've broken into new highs a month ago, above 76.93. We still haven't broken down through that. There is short-term drift here, no question about it. But it's done nothing really to impinge on the medium and long-term bullishness. The ones that should be looked at, the pathfinders, really are the FTSE, who's been drifting for rather longer than the S&P and Eurostoxx 50. And I think you should watch the FTSE 10765, for example. A break of this might another failure at 109.44. A break of this 107 level might set off more anxiety, and yet on the other hand, if we were able to break back above 10.944, that would be exciting and set up the new bullishness. So watch FTSE as an indicator of what's going on elsewhere across the board. Also the Nikkei, which has been drifting for rather longer, so some 3 months. So watch the Nikkei too in terms of its behavior. Any close approach or break of 59.420, and that would set off alarm bells elsewhere. That's my view. The bonds, well, my long-standing view of the bonds is that we are bullish of yields, medium and long term, but short term there's lack of clarity. We're looking at both yield charts and price charts. You'll see there's a trading range there yet to be broken, but there's a broken and completed long-term high yield chart price-wise in that big triangle. We're very close to short-term, medium-term levels in price terms, so a breakdown through 108.26 would be the signal, the catalyst for more price action in line with this triangle. Watch for that. German bonds similarly, long-standing break up through this resistance and above these prior highs, and attempt to break up. This is a good bull trend over a year of higher yields. Once again, we're very like the US. We're very close to 123.77. A convincing breakdown beneath that would set off price selling, yield buying in the German bonds. The gilts a little less, but we're still long-term bearish of gilts, no question about it, price-wise. Short-term, we need a bit more of a breakdown price-wise beneath 84.98. You can see there's quite a trading range there. Oil trading range. Watch this. This might be a bit of a bull triangle here. If you're more cautious, you want to break above 91.27 for this could be conceivably a rather badly misshapen continuation head and shoulders. Watch for these breaks here and an establishment above that triangle diagonal there. Gold, well, the huge rally. We thought this was a completed head and shoulders top. It's broken back to the neckline unambiguously. Stand back. There's a great lack of clarity here. Thanks very much.